Hey everybody, Boris with BK Forex. Welcome to the commodity dollar update for June 19th to June 23rd, 2017 for Aussie dollar, dollar CAD, and Kiwi dollar. And the COM dollars actually were the bigger story this week in terms of movement. There's actually a lot more movement on the commodity dollar side. First, move to carry earlier in the week as the market really got very negative U.S. yields and started to believe that the Fed may hold off on any rate hikes beyond the one that factored in last Wednesday. That, of course, makes Aussie and Kiwi very attractive. And those flows really did not stop. We had a little bit of profit taking on Thursday, but we came back now on Friday as I'm recording this. And overall, the COM dollar bid remains in place, although I have my suspicion that it's going to be very vulnerable to some profit taking next week. We'll get into that in just 1 second. When you look at the calendar, not really much on the plate, but the COM dollars do have the biggest event risks on the plate this week. We have, of course, the minutes from the RBA. That's probably going to be a non-event. They're not going to do anything except maintain their neutral stance. Data this week was pretty good. Employment data was very good. There's really nothing in the Australian economy right now that argues for any type of a move away from the neutral stance to a dovish stance. And as long as that stays in place, Aussie remains the premium carry trade in the marketplace. The other big event this week, of course, is going to be the RBNZ meeting. And that, I think, could be negative Kiwi, because I think the RBNZ is very unhappy at the Kiwi at around 72, 73. They want to see it below 70. They were very happy to guide it down last RBNZ meeting, and I think they're going to talk it down this time by actually saying that they're open to the idea of a rate cut, because I don't think they, I don't know if they're going to actually do it, but they certainly have the ammunition to cut another 25 basis points. And the GDP last week was weaker than expected. Now, dairy prices, everything else has actually been relatively well bid. Chinese economy doing okay. Still doesn't matter. I think the RBNZ feels like they have scope for further easing to bring the dollar down. They don't like, as I said, they don't like seeing the Kiwi above the 70 level. So I anticipate some sort of a negative dovish commentary out of the RBNZ, and that could be one of the more interesting trades into the week. And then last but not least, surprise of all surprises, who got suddenly hawkish was the Bank of Canada. Wilkinson, who is the incoming next president of the Bank of Canada, was much more hawkish than her predecessor, Polis, in a speech where she said basically that, hey, we're done with accommodation. That gave a huge boost to Loonie, and Loonie has been trading off of that pretty much all of the week long and maintains relatively bid. Add to that the fact that economic data has been relatively good, and we do have a few things coming up. We have the retail sales, we have CPI data out of Canada, and if that maintains pace, Loonie, despite the fact that oil is floundering around the $45 a barrel level, as long as oil doesn't head further south towards 40, Loonie remains a very interesting bid into the week, and I think it's going to be an interesting trade here where 131 could very well be tested, perhaps even the 130, which is a really key support level in the Loonie. So as we go into the week, the movement in the COM dollars as far as the levels go increases. So Aussie now is a 76.50 offer. That's a big resist area, and we'll take a look at why I think that's a sell area on the charts. With support at 74. Caddy broke that 34 resistance big time to the downside. Now that support becomes resistance at 34, and now we can be targeting 31 on further Caddy strength. And then Kiwi really floundering at the 72.50. I think 74 is a huge stretch as far as resistance. I think this is where we're at, probably at 72.50, but I sort of gave myself a little more room for resistance. And support now at 71, which could be tested if the RBNZ comes in and kind of pours cold water over the whole notion that they're done cutting rates. Let's take a look at the charts here, and you see what I mean. So here's Aussie making another power move that has been doing. This is really nothing but a trade to carry. This is the market liking the Aussie yields against the US dollar yields and giving it a high bid. However, as you can see, this is just a massive overhead resistance as once we get into the 76.50, 77.50 level. And I don't think we have enough juice here to overcome it. You really would have to have, you'd have to have a much more hawkish posture from the RBA, and U.S. yields literally sinking on the 10-year towards the 2% level. You would have to the market get very, very negative U.S. yields for the Aussie to break through this very serious resistance. So I think this is a pretty safe area to sell because that's been long-term resistance and it's pretty much fairly valued at this point. Kiwi, similar kind of a story, hitting very longer term resistance at 72.50. By the way, I'm just trying to remember when was this was. So here's RBNZ talking the Kiwi down, and we see the fallout from that for a couple of hundred pips post RBNZ. Do I see a repeat of that? I do. I think there's a strong chance here that the Kiwi could come back down. So the 72 now is big support. We're probably going to hold that before the meeting. But if we break that down, it could easily come back down and ultimately perhaps even test the 70. Overall, it's still a net bullish structure because I don't think we drop below 70. 70 will be the higher low. But between now and then, the bet on my side, just purely from the fact that we're resistance on the technicals and a potential for a fundamental catalyst, is to the downside on the Kiwi. And then last but not least, Caddy, definitely the best of all the condols this week. Look at this nice huge breakthrough of 34s and a continuity, and we're actually maintaining strength, but trying to test this 132 level. Very, very hardcore. A break of this 132 really puts us into a full zone position for a move towards the 130. And that still makes the Canadian dollar the strongest trade of the week, in my opinion, both technically and fundamentally. So we'll be looking for some interesting cross setups in our next video. Wish you guys the best luck, the best of trading. Boris Lossberg, over now.